Hey, how's it going, YouTube? Josh here with Work Save Bitcoin, the channel where we talk about protecting your time and energy by saving in Bitcoin no matter your budget. So today I wanted to talk about just how early we are to Bitcoin in terms of market cap. We saw recent news with Abu Dhabi's wealth fund, Mubadala investment company has emerged as one of the largest institutional investors in BlackRock's iShares Bitcoin Trust. Its holdings are valued at $461 million now Bitcoin. And this is a huge investment company. They own about $302 billion in assets, and they are just starting to dip their toes into the water. I saw this tweet, which I think sums it up pretty well, from British Hodl. When you have a $1.7 trillion fund, $436 million is kind of what you buy in Bitcoin to test liquidity and the speed of acquisition without moving the market. It's like when you open up your broker account just trying to buy 5,000 shares of IBIT and place an order of one share just to see. That's what Abu Dhabi is doing right now. The flood is yet to come. And I really liked this first reply here. This is just them dipping a toe in the water. When they decide to dive in, there won't be enough room in the pool. And I think this just sums up very well where we are currently with Bitcoin adoption, where obviously some of this is speculation on what their intentions are, but once there's a race to Bitcoin, once the supply shock occurs and everyone races to accumulate Bitcoin, there will not be enough left for everybody. And these funds and companies that are accumulating Bitcoin, they want to be able to accumulate as much as possible without moving the price too much, by buying either off exchanges or other methods to prevent from moving the market too much. But once that FOMO really sets in and we see the big supply shock, that's when things will get crazy. And I always like to revisit this chart of Bitcoin compared to other assets. Just, it is a tiny dot even compared to other assets. We pretty much know at this point that Bitcoin is superior to gold as a store of value in every single way. There's no reason Bitcoin shouldn't already be at the market cap of gold, but just the fact that it's at 1/8 of the market cap of gold just shows you how incredibly early we are. And it'll just continue to eat into these markets. It'll continue to eat into the real estate and bond markets as more traditional investors realize when you save in Bitcoin, you no longer need these types of assets just to maintain your purchasing power. Whereas on the dollar standard, we need assets like real estate and bonds just to keep up with inflation. Whereas when you adopt a Bitcoin standard in your life, you realize that the money becomes the store of value and you no longer need to park your value in real estate. When real estate becomes just a place to live and not an investment opportunity, Bitcoin will just completely eat into these huge squares. Like, there's just so much potential to move when we're talking about an asset that has the potential to become the global reserve asset. So like I was explaining in the previous video, your conviction in Bitcoin should match your portfolio. You should never own zero Bitcoin. If anyone tells you Bitcoin is risky, tell them owning zero is far riskier than owning a percentage of Bitcoin. So when just looking at this chart, it's pretty hard to ignore the fact that we're still incredibly early. So if you're here now, appreciate the opportunity you have and capitalize on that opportunity by starting to dollar cost average into Bitcoin or buy as much as you are comfortable with. And I try not to directly tell people that they should buy Bitcoin. I try to just tell people to study Bitcoin. And I think the more people study Bitcoin, the more that they want, and they realize that they don't have enough. So if you are enjoying this type of content, please leave a like and subscribe. It means a lot for the channel. And as always, together, let's work, save, and build a brighter future with Bitcoin. See you in the next video.